So I don't know if this is any unusual spike or anything like that. I think it's just following our same trend that we've been following for years. And it probably will slow down once we get in once we get into June, July, August.
Yep.
So, and the prices do they spike with the bidding wars. And then when the bidding wars stop, they come down a little bit. And so if somebody is looking to buy in this market, and it's always tricky trying to time the market, but you probably could get a better deal and negotiate maybe some better terms if you wait till summer.
All righty, folks, it is that time. It is that time where we look in the mirror and we try to figure out what happened. Again, why do we want to do this? Well, again, as Beth Traverso has told us for years now, King County, aka Seattle, heads into the spring selling season in January. This happens to be rather early when you look across the country. So if we can figure out what's happening in Seattle, it might be an indicator of what the spring selling market will look like for the country. Again, might. To that end, Beth, it looks like you got January numbers. What do you got?
Yes, I do. Hi there. Good morning. So the interesting thing about January numbers is a couple things. So in our market, greater Seattle area, in King County, January numbers are typically the lowest sales price of the year. Mm-hmm. It peaks in May as far as close. So and the trough is in January. So we're looking at the low end now, because this is what went under contract in December. If we think about it that way, almost all of these went under contract in December. We all know December is a month where it's slow. People are on vacation, distracted. It's our slowest month of the year. August being the second slowest in our area. So January was a little bit lackluster, but this is the month where we start to see things in the pending data. We see things start to spike up a bit, but I wouldn't be too alarmed about that, because it's really just echoing our typical seasonality that we see. And I would say for people that are watching, it's really important to learn these numbers so that you can spot what's a seasonal trend, and if you see something that's really out of line with a seasonal trend, then I think, oh, okay, something's happening here that's different that we need to be aware of, and maybe make a pivot. So
I like that. I think that's great advice. Again, January is the start of your spring selling season. But to your point, what we're looking at here are actual closings. And closings in January are December's pendings. Mm-hmm. I think that's great advice. We'll definitely get into what's going on in the active market and pendings after this. But let's talk January. I found
some interesting things. So for all of King County, I saw a lot of swings as far as certain parts of King County were really up year over year price wise, and others were down significantly year over year, which is interesting. These little sub markets. And so the highest price, on the east side in our area, we've got East King County and then the Seattle side. And I tend to work more on the east side. And east side prices are up almost 17% year over year, which is a huge jump.
Now, do you happen to know how many transactions were on the east side?
Yeah, on the east side, closed sales, 204.
So we had 204 closings.
And last year was, January 2024, it was 198.
Oh, that's a good info. Okay, so closings are up year on year and prices up double digits.
Yes. Now, in some markets, if you have very few sales and one really expensive one sells, or you got a bunch of low end something, that can skew the numbers. And we see that in the really high price zip codes or subsections where there's a mansion sold or a mansion didn't sell. One sold last year. It just makes it look really off. That's why you got to look at the trends over time. Mm-hmm. Interestingly, Seattle was a little bit down. Their median price was down 1.3%. So I thought it was interesting that the vast difference between East Side and Seattle.
Now, I'm going to guess Seattle had a lot more than 204 transactions.
Yeah, so Seattle had 252. So again, that's too many.
Wow, that is actually.
We never have a lot of. We always have low inventory, considering King County has over 2 million people in it, and that's why part of the reason why our prices are so high. And there's a lot of reasons for that. They have a lot of restrictions on building, a lot of environmental. They make it hard to build in many different ways, and there's not a lot of turnover. So. Yeah.
So it's funny you're bringing this up because when I think East Side versus Seattle proper, I was like, the East Side's got to be vastly smaller transaction wise, but it's really not. It's 20%
No.
smaller, 250 to
So,
200. So
and it's newer, more suburban style homes,
sure.
generally speaking, or there's some acreage properties too, but they're mostly suburban subdivision homes, maybe on a third to a half, decent sized
Yeah.
yard. It's known for having the best school districts. That's always debatable, right? But the highest ranked school districts, and it's closest to all the tech employers.
Okay.
So, for example, Microsoft headquarters are in Redmond on the east side. Amazon is kind of split between Bellevue east side and Seattle, downtown Seattle area. So people that want to be close to that, it's a lot of these, it's the tech buyers. It just goes to show you the people with their stock portfolios that are looking healthy to them. It seems it's affordable to them, and that's where they want to be. And an interesting trend that one of my team members here and I were just chatting about was how the low end has been, and this was true, in these January numbers, and then we can talk about what's going on now, but lagging a little bit, where you think the lower priced tier would be the most competitive. But I'm not seeing that in the numbers. And the reason why I'm just speculating, but what I hear is that those are the people that are struggling more to afford to get into a home. The first time home buyers, they're more rate sensitive. These people buying a house for 1.8, 2 million, where they've got a lot of money and they're putting a lot down, and they could afford even more if they wanted to.
Right.
They don't have the same financial constraints that the lower end buyers have. That, and also the fact that there's been a return to work mandate for Amazon,
sure,
and others. And some of these people that purchase farther away, maybe we're not seeing as much demand for those farther away houses right now. It could be a blip, I don't know. But we had a listing down further south where the commute time is significantly longer to get to any of the major employment centers. And it struggled a little bit. It did sell, and it sold for a really good price. So don't get me wrong, but it wasn't one of these ones that had the bidding wars.
Right. Yeah. So again, to summarize the price numbers, King County East Side is up 17%. Seattle proper down, call it 2%.
Yes, and so for example, the sales price, median sales price on the east side was, we'll call it 1.7. Last year in 2024, it was 1.45. So it went from 1.45 to 1.7. And I'm seeing that on these tract homes, on the east side. Wow. And these are homes that went under contract in December. So keep that in mind too, before the bump. And then Seattle, Seattle homes are smaller, and it's a whole different thing over there. And I've sold on both sides, lived on both sides. Seattle, it went from 857 this year. Last year it was 869, so it went down a little bit. So, but not much. I mean, it's negligible, but 1.32%.
Nice.
So, and then some of the suburbs were way up and some were way down, but I think it might have some to do with that struggling to qualify. And on the lower price point, because the farther you get out, the more affordable it is. It's like these rings. There's the epicenter. In the Seattle area, there's two epicenters. There's Seattle, the middle of Seattle. And then there's Bellevue is the other epicenter. And then every ring out you go, it gets a little more affordable, generally speaking.
Yeah.
And so these ones that are like in the third tier ring or fourth seem to be struggling the most.
Yeah, I think what we're seeing right now is there's no question, even when you look at the macro data that National Association of Realtors, or NAR, puts out, the first-time home buyers are historically low. I think the last report I saw was 20 or 21%, where historically it's closer to 40%. So again, they're clearly struggling. We clearly are seeing rates over 7%. We've clearly seen, a 40, 50% run in home prices in 3 or 4 years, depending on where you are. And I think you're right. I think first time buyers are tapped out. One of the reasons King County and Seattle is probably seeing that stuff linger is it's so expensive, Beth. It doesn't even make sense as a rental. Right?
Oh, no.
the mortgage payment is, I don't know, I'm gonna make it up, $5,000, but rent's $3,000. There's
Yeah.
not even an investor will come in and make that
No.
investment.
What investors are buying now in our area are homes that you can flip the house and build an ADU or DADU in the back.
Yep. That's exactly what I was going to guess. I was going to guess the people who are doing it are buying houses, AKA lots. And they want a rundown house, so they get a little value add on the house, but they want the land for adding the detached ADU. And I'm going to guess a lot of them are doing junior ADUs where they're taking the garage and making studios. So I think what's happening in Seattle, happening in San Diego, and some other markets is people are buying single family homes and making them triplexes. That's what's happening.
Yeah, and there's more and more density going. So in King County, we also have an urban growth boundary where you're allowed to do that within certain areas. And if you're outside that area, you can't do any of that. So it's still going to keep pressure on the areas that are designated to be more rural by design.
Yeah.
And you're not going to see it won't have the infrastructure. If you're on a septic, for example, you're not going to put a DADU in the backyard.
Nope.
Some people don't know that when they're out there looking and they're like, oh, well, this has a big backyard. I'm going to put a unit back there. Like, well, you can't. There's a septic system. It's different.
It's different.
When you're in the city, it's all sewer and you can work with things. But still, it's important to know, like, where is the sewer connection? And there's a lot of things to know if you're going to build an ADU and DADU. But that's where people are getting creative, is by adding that. And on these east side houses where there's not as much opportunity to do all that. I mean, there's some zoning things coming down from the state level that might make it so ADUs have to be allowed. But a lot of these are HOAs where they're not going to want to allow that the backyard cottage. But I do know that buyers, whether they're going to rent them out or not, there's huge demand for the accessory dwelling unit for maybe older kids that haven't launched, or aging parents, or guests that come and stay.
Yep.
There's a huge demand for that. So I think if somebody wanted to add value, that's the way to do it. You're right. The numbers don't work for a rental. You have to put, basically, my general calculations have shown that you have to put about 50% down to break even.
Yeah.
Is that your best use of money? Probably not for most folks. So, but those that are buying tend to be, there's a lot of cash buyers who is just like, maybe they already have a huge stock portfolio and they're just parking some money in real estate to diversify, or whatever their reasons are. And they don't care so much about the rents, are sort of secondary. But that's not how we operate here at One Rental at a Time. It's a different way of doing it. So to find that cash flow, you need to go farther out and get more creative as far as finding ways to add the value, add the DADU, or I like it better, even the one that convert the garage or the basement to an ADU. That's a lot easier. If you're not an experienced builder, you can convert a basement a lot easier. That's what I did with my first house hack. I converted, put a little studio ADU in the basement, and it was great. It paid my mortgage. So I got to live there, not for free, but pretty darn close, which is a win in my book. So
yeah, anytime you could take your biggest expense, X taxes, like housing costs, down to close to, if not zero. Yeah. It's a massive win. It's frankly the cheat code to wealth. So let's fast forward. What's happening middle of February? Last week or the week before, you talked about bidding wars coming back, at least at some scale. I'm curious, it's been a couple of weeks. What's happening? We still got bidding wars, or is that cooled off?
We have them, and they tend to be in the, I know. I hate to be the bearer of bad news for people that are looking to jump in, but that's what we're seeing. And we're seeing it mostly in that middle tier. I remember we were talking, a year ago or whatever that was, about just how this lack of the middle, missing middle.
Yep.
And now the middle's starting to come back a bit. So does that mean that the people are tired of the bunk beds? They want to move. They're getting itchy. They're not going to wait for rates to go down. It's been years, 2.5 years, going on 3 years now. And people are moving. And it doesn't mean they're necessarily upgrading. Some are maybe, but they're moving to other areas, and they don't want to keep their existing home as a rental for various reasons. They want to roll that equity into something else. The numbers don't work to keep it as a rental. They don't want to be a landlord because that's getting stickier around here for the laws, or whatever their reasons are. But that middle tier, which where I am, and my buy box tends to be around 1.2 to 1.8, like about in that range, that has been moving really, really fast.
Okay.
So especially
Well,
on
I
the
think,
lower end of that.
yeah, I think it's really interesting. This is going to be something to watch all year because eventually you're absolutely right. The missing middle will come back, and it's in my opinion time that starts. So it may have started to trickle now, which again, a trickle when there was nothing before feels like a
Yeah.
lot. So that's where we could be. But I wanted to give Lance Lambert a shout out. He just published this an hour ago, and this brings up the point that I knew was coming. Interest rates today are 7.05%. A year ago, they were 6.98%. So they were
Interesting.
only 7 basis points different. So what is happening? The longer time goes by and rates stay at low sevens, the more and more people will just go, I give up. I'm tired of the bunk beds. I've got to get a place for mom. She can't stay alone anymore, or whatever. So we just need
Yeah.
time to unlock the missing middle. And it may have started. If it is, it's a trickle. But my guess is it comes out in floods in 2026.
And that will be really interesting to see. And that's one of the things I enjoy about real estate is it's always changing and different, and the circumstances are forever shifting, and it's kind of slow. You see things happen, but then like the numbers come out later, so you have to kind of see what's happening now to project what's going to happen next. One thing that I do expect will happen is, our sales numbers are, I mean, the prices are healthy, but the numbers overall are not overwhelming. Like 200 sales on the east side, it's not a lot. And so I think our number of sales in 2025 are shaping up to be low, just like they were in 2024. It's going to be a tough year for agents and people related to the real estate industry. That's not changing.
It's the last hard year.
Yeah, it's a hard
that.
year still. And I expect what we're seeing now is our normal surge that we see, our seasonality, where it revs up through March, April, and then we get our closings in May that are going to be our peak, and then it drops off a bit. And so I don't know if this is any unusual spike or anything like that. I think it's just following our same trend that we've been following for years. And it probably will slow down once we get in here once we get into June, July, August.
Yep.
So, and the prices do they spike with the bidding wars, and then when the bidding wars stop, they come down a little bit. And so if somebody is looking to buy in this market, and it's always tricky trying to time the market, but you probably could get a better deal and negotiate maybe some better terms if you wait till summer. That's how it works. But the thing is, in summer it slows down, and everyone's thinking, oh, what's going on with the market? They don't trust that something's not going wrong, right. And then they're scared to jump in, and then it happens all over again, so.
Exactly. Well, Beth, that's why you come back each and every week to keep us afoot of what's going on in Seattle and King County. If somebody wanted to reach out, buy or sell, or better yet, get a referral to another top agent, how do they do that?
Yeah, they can reach out to me through my website. It's on the screen here, BethTraversogroup.com. You can message me on there. Is a great way to reach me. Or if you Google my name, I'll show up all over on social media, etc. And you can message me there too.
Very cool. And she's inside school, folks. So if you're inside there, just send her a note. Thank you.
Thank you.